Welcome to FlightGlobal Focus. My name is Lewis Harper, editor of Airline Business at FlightGlobal, and joining me for this episode is FlightGlobal's airlines reporter for the Americas, Howard Hardee. Hi, Howard.
Hi, Lewis.
Howard, the North American airline market initially emerged quickly from the COVID-19 pandemic, and things looked to be returning to a kind of pre-COVID normality, which I guess as aviation reporters did initially look a bit boring, but almost as quickly it then became one of the most interesting markets globally, I think, because of what began to happen to many of its airlines and particularly in the low cost side of the business. And on that topic, could you tell me why the ultra low cost carrier model, which was so successful for so long and drove so much of the airline sector's growth, is under so much pressure now, particularly in the US? What's going on there?
Yeah, it's a really good question, and I agree that the low-cost sector is probably the most interesting aspect of the U.S. airline industry right now. There really are a host of reasons why the discount carriers aren't doing so hot, not just one thing that you could point to. I think a big part of it is competitive pressure just in general. You have to start with what the major U.S. airlines have done. It has often been observed that the back of a domestic United flight, for example, is essentially a low-cost carrier with its own sort of no-frills product where you can add bags and choose your seats if you want. But there's an opportunity to buy relatively inexpensive airfare and fly on United, sometimes for as cheap or even cheaper than you would on, say, a Frontier flight. Delta and United and American have sort of dialed in their economy products to be really competitive with low-cost carriers since the COVID pandemic eased up. And if you talk to the low-cost carriers, this is something that always comes up for them. They're not only competing with each other, they're competing with the big dogs in the US, and they're not winning that fight. Then for several years now, the market has been flooded with inexpensive airline seats to popular places in the US. You have a lot of LCCs and major airlines essentially squeezing into the same places. So markets like Las Vegas and Orlando and Los Angeles have become oversaturated, as they say, with cheap seats. That drove down seat prices and made it really hard for anyone to make money flying into those really popular vacation destinations. Airlines have been adjusting their networks accordingly over the past year or so, or maybe a little longer than that, really, attempting to sort of better position themselves to fly profitably and cut capacity in certain areas. You've seen players like Allegiant and Avelo and Breeze really double down on their playbooks of targeting underserved or completely unserved markets. They want to hit city pairs where they don't have to fly head-to-head against Delta or what have you. Airlines like JetBlue have sort of retreated back into their strongholds rather than having really broad network coverage. JetBlue is really focused on being an East Coast leisure carrier again, rather than doing a lot of these cross-country flights that maybe were a stretch for them. So we've seen low-cost carriers kind of pull back their networks, cut capacity, and even in some cases reject jet leases and sell off aircraft as a response to the demand environment. Another thing I would bring up, and this is really more of a big picture thing, but the low cost sector has been flying really big jets. Spirit and Frontier fly Airbus A320 family jets, and an A321neo seats up to 240 people. And really to fill that many seats, you need to be flying into the largest markets in the US. And that sees you competing with the likes of Delta and United and American and Southwest. And, really good luck with that. The scale that those airlines deploy is just so hard to compete with directly. So flying large aircraft into large US cities and trying to make money is really tough. And finally, just really the icing on the cake here has been engine issues. In particular, the Pratt & Whitney geared turbofan recall has been really tough on JetBlue and Spirit, both of which are A320neo operators. They've been really struggling with double-digit numbers of grounded jets in recent years as Pratt works through their backlog of engines that need repair. Spirit has had at times near 30 or maybe even over 30 grounded A320neo family jets. This has been a huge anchor on Spirit and really a big aspect of why they've been forced to file for bankruptcy twice, dating back to November of last year.
Thanks, Howard. Yeah, and Spirit, as you've started to outline there, is really the kind of the first example that comes to mind when you think about the the struggles of low-cost carriers in the US. Could you walk us through the latest developments at Spirit and maybe how their cost-cutting moves are causing waves sort of in the wider sector?
Yeah, absolutely. So walking back a bit, Spirit has had a really tough go of it coming out of the pandemic. As airline business reporters, we track all these airlines' quarterly financial results. And I was just looking at the heavy losses that Spirit has sustained coming out of the pandemic. They recently just recorded another net loss exceeding $300 million. Obviously, you can't keep doing that very long and expect to keep your doors open and your lights on. And I would like to make a little note here. We reporters often look at these things very clinically, kind of examining what has gone wrong on the business side of things. But I would like to say that we really do sympathize with all the aviation professionals who have lost their jobs or have been furloughed due to the situation kind of ongoing at Spirit. It's been a really painful period for lots of pilots and flight attendants, and even the C-suite recently agreed to take a pay cut matching that of their pilots as they kind of restructure their finances. With that out of the way, Spirit has been under intense pressure for all the reasons that we mentioned before. They had some of the greatest exposure to the oversupply of domestic capacity and also the GTF engine issues that are plaguing the A320neo family operators. They've been making some big moves that have been having a big effect on the whole low-cost space. They let go of their old CEO, Ted Christie, earlier this year and installed Dave Davis, a former Sun Country Airlines executive, as their new chief executive. In September, they entered their second Chapter 11 proceeding in less than 12 months, saying that they had made progress, but even more drastic action was necessary if they were going to right the ship. They have since exited 11 U.S. cities entirely, and they've been slashing capacity across their network by as much as a quarter. So this is a lot of low-cost seats coming off the market all at once. And perhaps most dramatically, they have been rejecting leases on their Airbus jets and returning dozens of jets to lessors. So they're really shrinking their fleet significantly and very rapidly. Just last month, they removed 52 Airbus A320neo and A321neo orders from their order book with Airbus. They said that they did not have financing commitments in place with those jets, which were due to be delivered between 2029 and 2031. So as part of the restructuring, which they've been undertaking with lesser AerCap, they dropped those orders. They've also rejected the leases of another 27 aircraft. So this is just like a huge reduction of their fleet. It exceeds the number of jets operated by Sun Country Airlines, for example. So this is a way for Spirit to get out from under some of those engine issues that we mentioned and also cut down on their future financial commitments. But it comes at this great cost of drastically reducing this really sizable fleet that Spirit had been aggressively building up over the past 10 or 12 years.
Thank you. And obviously, as you mentioned there, as part of that, Spirit's network cuts are potentially opening up doors for rival carriers. Frontier would be a good example, but also perhaps some of the smaller but growing players like Breeze and Avelo, which you mentioned earlier. Can you talk us through that opportunity a bit?
Yeah, absolutely. In terms of how this is all affecting the rest of the low-cost sector, Frontier Airlines out of Denver has been really vocal about how they're moving in on markets that Spirit is abandoning. Barry Biffle, the CEO of Frontier, said during the company's Q3 earnings call that the competitive landscape is shifting in its favor. And he sort of laid out the airline's plan to become the leading low-cost carrier in the top 20 largest U.S. metros. So they're really stepping in and assuming that role recently vacated by Spirit. I would say whether that strategy proves to be a moneymaker for Frontier remains to be seen. It's not like Frontier hasn't had struggles of its own. It's subject to all the same market forces and competition with major U.S. carriers, though I would note that they have been spared the worst of the GTF engine issues. And Biffle himself has acknowledged that the airline needs far greater scale in order to compete more meaningfully with the big four U.S. airlines. To a lesser extent, carriers like Allegiant and Avelo and Breeze have definitely benefited from Spirit's pullback, even though they might not be targeting routes directly that overlap with Spirit's shrinking network. Just having all these low-cost seats come off the market all at once is good for them. It eases up some competitive pressure and also maybe have an effect on airfares in certain markets in a way that will probably give them a bit of a boost. For a long time now, there have been voices calling for either consolidation or elimination of a low-cost carrier in the USA. People have been saying there are just too many low-cost seats on large narrow-body jets. And now we're seeing this heavy contraction from Spirit. And so a lot of people are basically getting what they asked for. And we'll see how other airlines capitalize on the opportunities out there.
Indeed, and Spirit itself has said that an acquisition or merger with another carrier is maybe one of the most viable paths to keep the operation going. We know that Frontier has made several overtures, and of course JetBlue's attempt to acquire Spirit was blocked by a federal judge. Do you think an airline tie-up still seems likely?
Yes, I do think it's likely. Frontier has made several moves attempting to acquire Spirit over the years, maybe like 3 or 4 separate attempts now, dating back to 2022 or so. So they've been pretty aggressive in the concept that Frontier and Spirit would be better together and they could join fleets and create the country's largest discount carrier. And that scale could turn into a real competitor against the big 4 US carriers. Spirit, however, has consistently spurned Frontier's advances. Lewis, you likely recall that Spirit sort of left Frontier at the altar. They were supposed to tie up before JetBlue came in with its over-the-top $3.8 billion offer that Spirit just couldn't refuse. Of course, the JetBlue Spirit deal was blocked by a federal antitrust lawsuit under the Biden administration. Since then, Spirit has really sort of limped along. It really felt like maybe they had all their eggs in that basket and then the basket blew up. Then there's this sense that maybe Frontier will step up and try again. Barry Biffle, the CEO of Frontier, recently testified during a Senate hearing on airline competition. And he was pretty open about the need to achieve greater scale. And he was arguing that a tie-up is practically the only way to do it. And Frontier has made some overtures more recently with Spirit going through its various restructuring processes. And I do think it makes some sense on some levels.
And what do you think that would look like, Spirit and Frontier potentially tying up? And if it did happen, what would you say the implications would be for the low-cost sector in the US?
Spirit has said that a merger acquisition may be the way forward, the way to save the post-restructuring company and keep its remaining aircraft in the air. Frontier is the most logical suitor. They both operate A320 family jets and have similar business models. A lot of observers have said, why not join forces? And there is some sense that the Trump administration would look more favorably at a major airline merger. And in terms of the impact that would be a huge dynamic shift within the industry. Right now, you have several low-cost and leisure carriers kind of duking it out for the bottom 20% of the U.S. airline market that is not dominated by a major U.S. carrier. If Spirit and Frontier became one company, suddenly you have a carrier that could throw around some weight, particularly on ticket pricing. And you could see them kind of becoming an antagonizing force for the big carriers. Some analysts have noted that you'd maybe just get a bigger carrier with all the same problems that currently afflict the LCC sector. You'd still have this fleet of really large narrow-body jets that essentially forces you to fight the big 4. They maybe have a point there. Looking at other possibilities outside of Spirit and Frontier tying up, I don't think that there's interest on JetBlue's part. They're busy with their Blue Sky partnership with United. And there are some whispers around the industry that a tie-up might result from that collaboration. Looking around, maybe, American Airlines could have some interest, or even Alaska Air Group. This is really just speculation on my part, though. I don't have any insider knowledge about who might be interested in acquiring Spirit. But there are some interesting possibilities out there outside of Frontier Spirit tie-up.
Of course, someone who has been quite firm on what's going on is United Airlines CEO Scott Kirby. He's been pretty vocal and labelled the low-cost sector as dead, saying that the big network carriers have effectively won the fight for budget-conscious consumers for the reasons you outlined earlier. Do you think he's right on that?
I think that we're seeing this long-term cycle where startup airlines operating the low-cost model, they come on the scene, scale up really quickly, they're really aggressive in adding jets, and then they kind of flame out. Avelo and Breeze are at the beginning of this journey. Spirit is at the end of it. Spirit executed a long series of sale leaseback deals that defer upfront costs. There are some questions about how you sustain a low-cost model once you've reached significant scale and you don't have the advantage of low labor costs and all of that. You can look to Ryanair in Europe as an example. They're really the world's shining example of what a low-cost carrier can do, but it's, as you know very well, it's a different ball game in Europe where the distances aren't as vast and the short-haul network really makes a lot of sense. But then on the other hand, you look at a player like Wizz Air, and they're not doing great either, right? You know more about that than I do, but it doesn't look good from here. I don't think that the low-cost model is dead by any means. Kirby seems to like the attention that he gets from making these extreme statements. He was right that the sector would struggle with market forces, and he was right that United had played that game really well to the detriment of the discounters. But I feel like there's always going to be a place for a carrier that comes along and says, hey, we'll take you to the same place for less money. I think what maybe needs to change are the fleet mixes. Breeze, for example, is having some success flying the smaller A220s, and Avelo just ordered E195 E2s from Embraer. So maybe the smaller narrow bodies that target smaller networks are the way to go. Because as we discussed, flying into Atlanta with an A321 is a hard game to play right now unless you're Delta Airlines.
Thanks, Howard. And yes, it is an interesting topic looking at, is this a sign of this development in the US, a sign of things to come in Europe? As you say, there is a different dynamic from where I'm talking from. I think Kirby did describe Ryanair as one of the few sort of success stories in the low-cost sector globally. But as you say, Wizz are having some challenges, and I think there's probably consolidation ahead in Europe as well. But it remains to be seen if the dynamic of the big network players really making the kind of revenue management moves that really fully challenge the low-cost carrier business model will spill over into Europe anytime soon. It's certainly a thing I'll be looking out for. Many thanks for your insights, Howard.
Thanks for having me on the show. Good to talk.
FlightGlobal Focus is your essential podcast for trusted aviation insight. We publish new episodes twice weekly. Join us on Friday for a concise news briefing, and on Monday for an in-depth analysis covering airlines, defence and aerospace. FlightGlobal Focus is a production of FlightGlobal with audio editing by Lucy Johnson. If you have any questions, comments, suggestions, or for commercial opportunities, please email podcast@flightglobal.com, and more information can be found in the show notes. Listeners can also access 20% off your new subscription to FlightGlobal with the code FGPodcast, and terms and conditions apply there. Listen, rate, review, and subscribe wherever you get your podcasts.